So on behalf of the UN Global Compact, Accenture Development Partnerships, and CARE International UK, welcome to today's webinar on how digital solutions unlock new opportunities for financial inclusion at scale. My name is Adesua Ihile, and I work on the Poverty and Inequality Initiative of the United Nations Global Compact. Thank you everyone for joining us today. Just to set the context for today's webinar, the world's poor often struggle to get by without access to formal financial services and tools. Through digital technology and innovation, new business models are being developed with the power to draw underbanked citizens into the formal economy and creating opportunities for the poor to lift themselves out of poverty. This webinar will provide an overview of financial inclusion and the digital opportunities available for serving a large untapped market, offer guidance through case studies and examples on how to leverage digital solutions to be more financially inclusive, and finally, it will raise awareness of the SDGs, including encouraging action in support of Goal 1 in ending poverty in all of its forms everywhere, and Goal 8 on reducing inequality within and among countries. Before jumping into our main presentation today, let's go through the agenda. So the webinar will last about an hour, and the agenda will be as follows. For those of you who are unfamiliar with the Global Compact, I'll give a short introduction to our work and the importance of the topic to the Global Compact. Then I'll turn over to Mia Overall from Better Than Cash Alliance, who set the business and social case for digitizing financial inclusion. We will then hear from Finn-Eric Knowles from Accenture Development Partnerships on financial inclusion research, and Fiona Jardin from CARE International UK on practical examples of digital platforms paving the way for financial inclusion. Then we will have a question and answer session. During this session, we'll be opening it up to you in the audience to submit questions to the finalists before finally wrapping it up. While we will be addressing questions to the panelists during the question and answer session only, we encourage everyone to submit questions to us throughout the webinar. To do so, please type in a question in the questions on your GoToWebinar control panel marked by the letter A on the screen. Please also indicate to whom the question should be addressed. Also, if you're experiencing technical difficulties, please let us know by typing a message in the questions pane or raising your virtual hand marked by the letter B on the screen. For those of you who aren't familiar with the UN Global Compact, we're the UN Corporate Sustainability Initiative calling on companies to operate ethically and 1, respect 10 universal principles on human rights, labor, the environment, and anti-corruption by integrating these principles into corporate policies and practices shown on the screen on the right. We also encourage companies to explore opportunities to support UN goals such as the recently adopted Sustainable Development Goals, recognizing, however, that support for UN goals is a voluntary complement and not a substitute for the responsibility to respect universal principles. We are the main UN initiative for engagement with the private sector and the largest corporate sustainability initiative in the world. With over 8,000 companies and 4,000 non-business signatories based in over 160 countries, as part of the company's commitment to the UN Global Compact, it must submit an annual statement communicating progress on meeting our 10 principles. The first 2 principles of the UN Global Compact relate to human rights and call on business to respect and support the protection of internationally proclaimed human rights and make sure that they are not complicit in human rights abuse. And this is where this webinar comes in with poverty and inequality. As such, there are so many other guiding principles on business and human rights, which are endorsed by the UN Human Rights Council. The UN Global Compact reinforces this baseline requirement of respect, but also encourages businesses to explore opportunities to take voluntary actions to support human rights, whether through core business activities, strategic social investment and philanthropy, or public policy engagement. And now we will begin the discussion for the webinar. Mia Overall will be our first speaker. Mia comes from Better Than Cash Alliance. She leads corporate outreach at the Better Than Cash Alliance, which is a partnership of governments, companies, and international organizations based at the UN that is accelerating the transition to electronic payments. Mia, I'll hand the phone over to you right now.
Great, thank you. Can everyone hear me?
Yes, we can hear you just fine.
Perfect. Well, thank you so much for having me on the webinar tonight. It's a pleasure, and it's great to have this chance to share some of the ways in which we are seeing that digital payments benefit business while also serving as an on-ramp for financial inclusion and economic growth. So let me just take a moment to set the stage. If you could go to the next slide. Perfect. So it's hard to imagine, but more than 2 billion people in the world are unbanked, and the majority of all those people are women. Now this means that they are excluded from the formal financial system, which makes it hard for them to save money for things like their family's healthcare needs or their children's education, or do things like invest in a business or access credit. If you go to the next slide. So the way that we address this problem at the Better Than Cash Alliance is by tackling payments made in cash. So you may be wondering, well, what's wrong with cash? Well, it's expensive, it's inefficient, it's insecure, and it's untraceable. And I'll just walk through a few of these challenges. So first of all, cash is expensive to move around. For example, if you think of trucks delivering cash, wages to a factory to be distributed among workers. It's expensive to have the security guards needed to accompany that cash. Also, cash carrying trucks carrying merchandise and dropping it off at retailers, collecting cash in return. Often that cash can be stolen. For example, we did a case study on our member Coca-Cola, and their bottler in Nigeria had trucks that would get robbed of their cash on their way back from making deliveries once a month. They digitized payments and that stopped happening. Cash is also inefficient. Companies waste a lot of time, staff time, and resources to process and distribute salary payments. This includes things like writing, signing, and sending checks to suppliers or workers, or counting out money to fill envelopes to pass out to workers. Leakage and graft are also issues in this context, and it happens all the time that a supervisor may swipe off or siphon off a portion of somebody's pay. It's also insecure, no matter who's paying or who's getting paid. For example, when suppliers or workers are paid in cash, the money could easily be confiscated by someone else or stolen by a family member or a neighbor, and it makes it very hard to save. And when cash disappears or goes into the wrong hands, it's difficult to trace. So moving on to the next slide, in light of all of these challenges, digital payments have a number of advantages. So first, let me just take a moment to clarify what we mean when we say digital payments at the Better Than Cash Alliance, and that is any kind of electronic payment, including direct deposit into a bank account or at a brick-and-mortar institution, or a deposit into a mobile wallet, or loading up a prepaid card. There are lots of products out there, and they're all better than using cash or a check. So no matter what form of digital payment is used, there are many ways in which they're good for business and good for people, and let me just walk through a few of them. So first, in terms of cost savings, I can't tell you how many businesses tell me about the money, they tell me stories about the money that they've saved by cutting back on the time that it takes to manage payroll, and how helpful it is for their business and for their cash flow to have better management of payments hitting people's accounts more quickly, instantly, as opposed to days later. I'll give you an example from Afghanistan. A contractor firm there called Central Asia Development Group saved 50% of its payroll costs, which for them wound up to be $5,000 a month. by digitizing payroll of, it was a relatively small operation, 700 employees. Here's how they did it. They spent $40 for each employee to get them a handset, so basically a mobile phone, a SIM card to get it registered, and to provide them literacy training. And they recouped those costs within 6 months and realized significant savings. In terms of transparency and security, digital payments are extremely helpful in increasing accountability and tracking, and obviously reducing corruption and theft. And the main thing here is how it helps address graft and siphoning. In Afghanistan, police officers were switched to digital payments for their salary payments, and they all thought that they got a 30% raise. In truth, they did not get a raise. They just got their full salary for the first time. So while the business benefits are extremely compelling and often the main reason that companies or organizations or governments switch over to making electronic payments, the great thing is that there are also tremendous benefits for people too. And we see huge impacts in terms of financial inclusion, women's economic participation, and inclusive growth. So digital payments can be a critical tool for advancing financial inclusion for a couple of reasons. One is that when electronic payments are set up, they need to be made into some kind of account. And for many people, it will be the first time that they have an account set up in their name. So in this way, it's a real on-ramp to them being included in the formal financial system. Second, from the point of view of financial institutions, it's a lot cheaper and more efficient to provide digital rather than cash-based financial services to the poor. And so it makes it much easier and more likely that financial institutions will develop and provide services to poor people. In terms of women's economic empowerment, studies show that greater account ownership among women can lead to much higher savings rates, productivity, and help women manage risks and absorb financial shocks. So in this way, digital payments give women much greater control over their finances, greater confidentiality, and it shifts the household decision-making towards women. If you can go to the next slide. So back up one, yeah, so who are we anyway? Well, we are the Better Than Cash Alliance. We're a partnership of companies, governments, and international organizations based at the UN, and the goal of all of our members is to accelerate the transition from cash to digital payments in order to reduce poverty and drive inclusive growth. We do three things primarily. We advocate for this transition from cash to digital payments, particularly in a way that advances financial inclusion and promotes responsible digital finance. We conduct research and we share, so we write case studies and do flagship reports documenting the experiences of our members in shifting to digital payments, and we share those as global public goods to inform the transition for other members and other organizations embarking on this same journey. And finally, we catalyze by supporting our members. So our members are the 50 of the organizations mentioned earlier, and we provide them with support in order to facilitate their transition. So on the next slide, it shows just a snapshot of some of our members, which include, if you could go to the next slide, which include, a range of different actors, companies, development organizations, including CARE, and a number of governments. So I'd like to share a couple of examples with you on things that our members have done. But before I do that, let's just take a quick poll to find out a little bit more about the interests of those of you who are tuning in this morning and what your interest in listening to this webinar is. So let me ask this question. Are you or is your organization exploring the benefits of transitioning one or more of the payments of your organization? It looks like the questions were cut off here. So could you just go back to the previous slide for a moment? But basically, A is, are you transitioning or exploring transitioning payments from your organization? Or B, are you a consultant in a position to advise other companies or organizations on the transition of their payments from cash to digital? C, are you a financial institution or in some way developing a financial service or a product that could be used by a company digitizing its payments? Or D, other, are you none of the above?
So at this time, we're just going to give a minute for everyone to enter in their questions, and then we'll have a report back session where we just share the results that we received from the poll. So I will do a 1-minute countdown, and I can just let everybody know when it's close to about 10 seconds left, and then 5-second countdown, and then we'll end the poll.
Are we meant to vote on the screen?
Yes, yes. The poll should show up on the screen, and you can vote on the screen, and we will get the results over here. Well, the poll has already been live for about 2 minutes, actually, prior to the countdown, so we can just go ahead and share the results from the poll. Because it seems close to everyone has voted now, so we can just go ahead and share the results. So 9% of voters said that their organization is exploring the benefits of transitioning to digital, to more of their organization's payments to digital. 40% said that they are in a position to consult or advise other firms on the benefits of shifting their payments from cash to electronic. 20% of voters said that they are developing digital financial services and products that could be used to support financial inclusion, and 31% said other.
Wow, very interesting. That's quite a spread. Well, it's very exciting, and I'm especially excited to hear about the number of consultants and also organizations advising others or developing new products and services. So great, thanks very much for taking the time to do that. Let me now just tell you about a couple of examples done by our members. So in Peru, there's a very exciting innovative partnership called MODELO PERU, that this has come straight out of the financial sector. So in this case, 34 banks and 3 telcos came together to build the world's first shared payments platform focusing specifically on financial inclusion. The reason that they did this was that only 30% of people in Peru hold savings accounts in formal financial institutions. So they identified a real market opportunity here to reach an unbanked segment of the population. And what they did is together they created a payments platform called BIM, which is short for, in Spanish, Billetera Móvil, which means mobile wallet. And it was specifically designed for the unbanked and informal Peruvians. And their goal is to reach 5 million Peruvians in the next 5 years. Now on the next slide, this gives you just a brief image of how it's working. So the way it works is actually that all the participating financial institution issuers can connect to one platform provider, which happens to be Ericsson, which means that from day one, all of the payments flow between issuers and across multiple networks. So it doesn't matter what telco you have or what bank you're using the mobile wallet with. It's easy to transfer money from one person to another or from one company to another on the payments platform. So it's a shared brand, BIM, and a shared platform where that make this such a truly innovative, a collaborative approach that's game-changing. This has never been seen before. In most markets, mobile money providers compete at the brand level, but in Peru, BIM is shared by all issuers. And as a result, it's an interoperable, e-wallet that anyone with a feature phone, so you don't need a smartphone, even a simple feature phone, can use to open an electronic money account, which is basically a simplified bank account, to transfer funds between each other. And with the help of a correspondent bank agent, they can put money in and take money out and transfer it to people they know. So it launched very recently, just in February, and as of March, there were already 85,000 people registered and 53,000 active accounts. And like I said, their aim is to reach 5 million by 2020. Another example is in Mexico. Grupo Bimbo, one of our members, which is the largest baked snack company in the world, launched a company called Redkibo. This means network, what's happening network, basically. And so this is a partnership with Banamex and Visa designed to outfit small merchants with POS terminals. The reason they did this is they found that many of their small merchants would be more competitive if they could allow customers to pay electronically by card and do things like purchase prepaid airtime, pay for their utility bills, and importantly use food vouchers given to them by the states, which are increasingly electronic. So setting this up with their small merchants required opening bank accounts for 25,000 small merchants. And they've had really good outcomes. So in 2015, credit and debit transactions doubled versus the value in 2014. And the approximate value of these transactions is 760 million pesos, which means that these small merchants are much more competitive. But the point that I really want to stress here is that whether you're making payments as a large company or receiving payments as a merchant or employee, digital payments bring financial and social benefits that lead to more inclusive economic growth. So I'll leave it at that, and looking forward to hearing the next speaker.
Thank you very much for that great discussion on digital payments, Mia. We'll now hear from Accenture Development Partnerships on the Within Reach research that was jointly developed with CARE International UK. I will turn to Finn-Eric Knowles from Accenture Development Partnerships to give an overview of the Within Reach research. Finn-Eric, the floor is yours.
Thank you. Thanks all for joining, and thanks for this fantastic opportunity to share our perspective on how digital can help bring much needed financial services to the world's 2 billion underbanked. Could we please go to my first slide? Next one, please. Brilliant, thanks. So my name is Finn-Eric Kolnes, Norwegian name, strange pronunciation, I know, Kolnes would work. I lead Accenture Development Partnerships focused on financial inclusion. Accenture Development Partnerships, ADP for short. Our mission is to make available Accenture's talent and capabilities to international development. We do that directly working with NGOs and other actors in the development sector, but also by supporting cross-sector partnerships with our commercial clients and with NGOs and donors. Now, digital is one of those capabilities. It's in Accenture's DNA. We advise the world's largest telcos and banks on their digital business models and technologies. And for that reason, I'm truly excited to be able to talk to the relevance of digital for financial inclusion. So we partnered with our good friends at CARE, previous slide please, at CARE International on a study to understand how banks are addressing the low-income segment and to derive what the leaders are getting right. What we did was to interview and we researched as well 30 banks in 12 countries. What I'm going to briefly present today is our report Within Reach, seen through the lens of digital. And I would encourage everyone to download and read the full report and to stay in touch after this call. So next slide, please. So first of all, why should banks care about financial inclusion? Why should telcos care commercially about low-income segments? Well, we have actually estimated the opportunity to provide the world's underbanked. That's individuals, it's micro, small and medium enterprises with credit and financial services to be a $380 billion business opportunity on an annual basis. So why hasn't that been seized already? Some of the reasons are the high cost to serve, low financial literacy, and difficulties credibly engaging customers that currently are not banked. Now, digital changes that game. And as innovations are scaled and brought into core business models, we believe that an increasing slice of the 380 billion pie can be had profitably. At the same time, going digital is not a bolt-on to strategies and operations. What we found is that less than a quarter of the banks we surveyed were truly aligning financial inclusion with the coherent corporate strategies and operating models. Fully harnessing the potential of digital requires a fundamental change to how customers are served, all the way from the mobile phone through to the back office. Next slide, please. So what we did was to derive 6 insights from the leaders that we observed through our research. Now, in the full report, there's an extensive amount of background info, including detailed recommendations and case studies. Again, I encourage you to read the full report to get the full scope of what we have researched and recommended on. So the first insight, invest now or be left behind, speaks to the necessity of securing internal investment for opportunities that may differ significantly from what the businesses are currently doing. As someone who regularly engages with industry leaders on their strategies, we know that envisioning a fully digital business model, agreeing on investment in new capabilities, and having the guts to wait for payback somewhere down the road requires strong business cases and stakeholder management. It also requires a vision among the leaders, strong execution skills, and sustained sponsorship. We actually did a report together with Financial Sector Deepening Africa on the change dynamics, the role of leaders, and how the development sector should interact with complex organizations to ensure that donor funding could help catalyze sustainable innovations and scalable business models for incumbent banks. Happy to share that with you after the call. So one thing is to say that payback can be somewhere down the road for digital investments. I would also add that some of the banks who have made the decision to invest in digital for financial inclusion ended up with much shorter payback times than they originally envisioned. So there is room for optimism and to be bold about making moves into digital. Now, secondly, we found that a micro-segment view is required to engage underbanked customers. Accenture's analytics teams support leaders on micro-segmentation based on a vast array of new data sources. And we know that digital can help tailor products to farmers' crop cycles, to offer retailers financing tied to value chains, and to help youth improve their financial literacy through gamification built into product design. One more point. NGOs know today's non-banking customers much better than banks do. But banks often find it difficult to reach out for partnerships. And through Accenture Development Partnerships work on forging and facilitating cross-sector partnerships, we know the power of those constructs, but also that it takes a very conscious and rigorous approach to overcome cultural differences, be that terminology, how you define success metrics for a partnership, and how you go about your project management philosophy. Now, the third insight speaks to what we see as a relevant finding. It all starts with payments. So payments is a low-trust entry point. No credit is entrusted with customers and no savings entrusted with banks. Yet telcos have to a large extent captured the payment space, with banks safeguarding credit and savings as their stronghold, to some extent advocating to regulators to keep telcos out of that space. We want to see customers getting access to the full scope of financial services, and we know that digital holds huge potential to graduate clients from mobile money through towards savings credit, and can do so by leveraging data and analytics across services and building gamification and training into digital channels. Innovative approaches such as credit scoring using airtime, mobile and utilities data is something that we get a lot of questions about from our clients these days. Now, we're advocating partnerships across industrial barriers. One example is in Shawari in Kenya, where Commercial Bank of Africa and M-Pesa, Safaricom, have partnered on an innovative solution. But there's also promising examples of banks becoming telcos, such as Equitel in Kenya as well. and also telcos becoming banks, as is the case with Telenor and Tamir in Pakistan. Also very glad to hear the example from Mia on MODELO PERU, which is a great case study on how this can be done. Now, let me pick up the pace a bit. Our fourth recommendation is to engage customers through savings and loan groups, overcoming barriers such as cost to serve, low financial literacy, and lack of trust in financial service providers. eKeys in Uganda shows how digital can help. Barclays, Care and Airtel actually replaced the physical boxes with free keys with a mobile money account where 3 group members could access funds by entering their PINs within a short time window. Now, cash will continue to play a role in these economies for the foreseeable future, and any digital strategy needs to balance digital channel with a physical component. That's what we address in our 5th insight. I'm not going to go into any more detail on that now, but you can read about it in reports. The final insight is about truly aligning operating models to financial inclusion. A key point for me to make in today's conversation is that there's a need to ensure that digital channels are integrated with banks' core banking systems, that the operating models are truly transformed to lower the cost to serve, and that analytics is leveraged to optimize products and to automate processes. My colleagues who were supporting Poland's mBank in building a digital bank from scratch know this firsthand. Digital should not be the icing on the cake. We're seeing that in many African countries and also in other regions, that a mobile wallet, that a payment service is just a bolt-on, and that the hugely expensive operating model of branches is still the predominant way of engaging with customers, also low-income customers. Now, this is all very challenging, and that's why we often find that new entrants and partnerships are able to leverage digital more effectively than the incumbents are. Next slide, please. So we believe that low-income banking has a huge commercial potential and are engaging with our extensive C-level network in banking and telecommunications to encourage them to align their strategies to the opportunity. We also see a need for NGOs, donors, and other sectors to come together and act as knowledge partner, help engage customers, and advocate towards regulators and governments. Now, the key to the 380 billion business opportunity is digital, and I could go on for an hour about that. Given that we only have 10 minutes or so today, hopefully you will reach out to me after this call so we can continue this conversation and explore what digital means for financial inclusion in your context. So thanks all for your attention. Please download the report, read it, and share with your colleagues and your contacts, and stay in touch. Thanks.
Thank you for a great overview, Finn-Erik. I'll now turn over to our final panelist for today, Fiona Jordan from CARE International UK. Fiona will discuss the various examples and learning from CARE financial inclusion programs leveraging digital platforms. Fiona, over to you.
Thank you, Adesua, and hello everyone. It's my pleasure to speak today about CARE's experience connecting people to formal finance through digital solutions. And a thank you to Mia and Finn-Erik, who have done an excellent job today explaining how digital technology is delivering financial access to more people in more places. So at CARE International, we're working with millions of the world's poorest in our pursuit to provide financial inclusion opportunities for all. But we know that businesses also play a key role in overcoming this problem of financial exclusion. That's why we're teaming up with organisations such as Accenture and initiatives like the Better Than Cash Alliance, and also many banks like Barclays as well as development agencies including UNCDF, which is the UN Capital Development Fund, and Plan as well. So we place a special focus on connecting women to formal finance who otherwise face some of the harshest barriers to financial inclusion. And in my presentation, I'd like to share with you our insights from our programming work, including case studies on where we've worked in partnership with the banks and telecommunication companies to deliver new digital ways of banking. And I'll outline some of the challenges and successes we've had along the way. So I see you're on to that why it's important slide. Okay, I'll just jump ahead a little bit. We know that it's fundamental to address the barriers and social norms that hold women back from accessing finance. because women face specific hurdles such as higher literacy, low income rates, and less freedom of movement. So we know that through our research that access to savings and credit is one of the most direct ways for women to achieve greater control over their lives and increase their own and their household's income and well-being. So it seems like a no-brainer that all people should have universal access to responsible financial services. Yet, as Mia mentioned, 2 billion people remain unbanked, most of whom are women, the poor, youth and the rural. And why is that? Well, Mia touched on this as well, due to all the reasons such as living in remote areas away from branches. Finn talked about the cost of accessing the branches as well, which is all blocking access to financial services, especially for the poor. So next slide, thanks Adesua. So how we've addressed this is by carers taking a savings-led approach to bring the poorest segments of society out of poverty. We do this primarily through our flagship program, the Village Savings and Loans Groups, which we pioneered 25 years ago. I just want to tell you a little bit about this program because it does link then directly to how we're having to adapt to the digital financial solutions, which is really helping us to scale up financial inclusion. So our work began all these years ago with these savings and loans groups, where we've basically brought together people who don't have access to financial services because of their remoteness and all those other reasons, and we're helping them to get together and save and learn financial skills and capabilities through that process. And those savings that they managed to put together help through tough times, and they also reinvest them into their businesses and their household. We've found that the savings groups is much, much more than just financial inclusion as well. It's turned out to be a very successful programming work. For example, in Afghanistan, women use the platform to talk about maternal health. In Ghana, people use these platforms to talk about ways to increase their cocoa yields. We found in places where there's unstable context, like in Burundi at the moment, that the savings groups are literally the only means to access funds. So these savings groups develop and they save and they grow, and then eventually what we're doing is helping them connect to formal financial services like the banks. We have a new state of linkage report which we did with Plan and Barclays, and that says that there's around 11.5 million savings groups savings members in groups out there at the moment, and so many of them are now connecting through this work to the banks. But what we're seeing is that there's still a real gap in how to actually speed up this process and also still overcome those issues of distance to the branches, and especially for women, mobility is a real challenge. Cultural factors might hold them back from going out there and accessing the branch. And this is why we've started to do a lot of work linking with digital solutions through innovations that Mia also touched on, and Eric, like the mobile money concept, group wallets, which are a virtual wallet through mobile money, and also smart agents, which I'm going to talk about shortly. If you could go to the next slide, please. So we know that mobile technology can leapfrog traditional bricks and mortar approaches to reach more people in more places more quickly. I'll just very quickly touch on this slide here that you can see, which outlines to us that one of the incredible things is that traditional relationships with the banks used to directly deliver products themselves. Now they're actually teaming up with mobile network operators to try and deliver their products more virtually and overcome access problems. So this pie chart here, you can see that there's now 6.5% of banks are teaming up with the mobile network operators to deliver products to savings groups directly. If you can go through the next slide, thanks as well. So I'd like to jump ahead now and talk about CARE's experience working in partnership with the private sector and other excellent NGOs and development agencies to come up with some solutions which are digital based to help especially women access finance. So the first is the Fidelity Bank Ghana example. So in 2013, Fidelity, CARE UK and the UN Capital Development Fund began working to link village savings and loans groups to Fidelity Bank branches. This was really good news because back then there were 70% of the population were financially excluded, and branches were majorly overcrowded. So where technology comes into it is through Fidelity's pioneering bank agency model, which helps break down the travel distances for customers by using a network of smart agents which are located in locations just around the corner from where people live, the grocery stores or the phone shops. So there's where you have agents, customers can go to them, make deposits, withdrawals, make bill payments and other banking transactions. And Fidelity also teamed up with MTN Mobile Money to offer the digital wallet concept that can be accessed by customers through their mobile phones. All of these examples I've just touched on are all products that are suitable for savings groups as well. Next slide, thanks Mia. Sorry, no, Adesua. So in the case study 2 is our mobile solution pilot in Rwanda. This is where we teamed up with the Cherie Blair Foundation for Women and KCB Commercial Bank. We wanted to do something to connect rural women who were finding it too costly and difficult to access their nearest branch. So with our inputs, KCB Commercial Bank designed and rolled out a savings product for groups which had low fees and could be accessed via the branches or through agents. This also sort of built on the concept that Finn-Erik was talking about, where a collaboration of the knowledge from the NGO partners on the ground with the commercial banks that are really invested in financial inclusion can really make a difference. So this product was rolled out through the mobile technology, which made it an incredible concept to be piloting for us. We learned a lot through that process, which I'm going to be able to talk to you about in a minute. Also, KCB were able to use an existing network relationship with Tigo, network provider. So it was a simple case of adapting what they already had to deliver a product that could be suitable for savings groups. So all in all, this meant that some of the most remote and challenged populations in Rwanda could conveniently access funds and make deposits using their phones or at the agents. Okay, so I'd just like to move on to my final slide. I just want to be able to share with you now some of the challenges and learnings that we got throughout these examples. It certainly wasn't smooth sailing, and yeah, a very interesting experience that it'd be a pleasure to share with you now. So the first example is the agent network, which has proven to be very successful, but there were issues to iron out. So what we found is the agents work for the banks, but the agents couldn't always come out to the remote areas where the populations needed the service the most. So although they were still in the supermarkets or in the shops, which is closer to the people than the actual physical branch, it still always wasn't just close enough. So as a solution in Rwanda, what happened was KCB came to the party and said, well, we'll help train some local community members to be an agent to help connect that distance issue. There was also an issue of liquidity for these agents. So the agents that were hired by the banks would have to find their own liquidity to keep on top of balances when people were making withdrawals from them. And that was very challenging for them. So the second insight is about trust and confidence of the people, which affects demand for the product. So trust is a major issue, especially for people switching from using, say, a metal box for savings to using a virtual digital wallet. If they don't know how to use it, they won't. So that leads me into the next point, which is about the need for digital literacy training to improve people's confidence. And in Rwanda, what happened was CARE and the Cherie Blair Foundation developed a training material for mobile literacy specifically. So not all agents could afford the necessary equipment as well to do business. The point of sale devices were expensive. So as a solution in Rwanda, KCB allowed agents to pay these off through installments, which really helped. Network coverage is an issue and needs to go further if we're really going to scale up financial inclusion for all, and if we're going to use mobile technology as a way forward. So last count, I think 60% of people across Africa live in coverage areas. So we really need governments and network providers to invest in that infrastructure and extend that coverage. And my last point is just around gender imbalances with mobile phone ownership. So in low-income countries, less women own a mobile phone, and if that's not resolved, then it's just not possible for women to make the most of what digital technology is offering through financial inclusion programming. That brings me to the end of my presentation. Thank you very much. I look forward to the Q&As that are coming up.
Thank you very much, Fiona. And with that, that concludes the discussion portion of this agenda. I will now move over to the Q&A. Thank you, everyone, for submitting questions. Just to run over very briefly, to submit a question, please type in a question in the questions pane on your GoToWebinar control panel, marked by the letter A on the screen. Please also indicate to whom the question should be addressed. Also, if you're experiencing technical difficulties, please let us know by typing a question in the questions pane or raising your virtual hand marked by the letter B on the screen. In the interest of time, I will just read over all the questions that we have received so far, and then I'll have our panelists answer them in about a minute or so. The first question we received is for everyone, and it goes, how important is internet access? Is free internet access being promoted worldwide? And that is our first question. The second question was for Mia. It goes, do you think MODELO PERU will be profitable for the service providers involved, and what will it take? Is this a model that could be replicated in other markets? Our third question is for Feneric. It goes, can Feneric please share the name and link for the report that he advised we download? Now, we have a resources section where we will display this resource, so if you would like to look at it, it'll be on one of the final slides. And now we'll go over to the next question for Feneric, which is, what are the biggest challenges for incumbent banks with all of their capital and scale to launch inclusive and commercially sustainable financial services for the poor? And what should international developers be aware of when approaching and interacting with banks? I'll turn over to the panelists to answer the first question.
Hi, it's Fiona here. I can jump in with the question which is around how important is internet access. I think it's a great question, and through my experience it's incredibly important, and perhaps I can use an example from actually an unusual example which is from Australia, but in very remote indigenous communities where people are very financially excluded. And in those communities, internet access is literally the only thing that's connecting people to the banks. But in those examples, and I guess it's the same for all remote areas as well, but in those examples, access really depended on the quality of the networks, of the internet connection as well, and the amount of financial literacy that those people had to be able to use that software. So those are just a few insights that I was happy to share with you. Thank you.
Yeah, it's Feneric here, and I think to really drive digital financial inclusion to scale up, obviously having a good connection is key. I would also add that we shouldn't be waiting for the perfect connectivity to start looking at innovative solutions, and taking Mshawari for one, which operates on USSD, and also other technologies such as Telenor's over-the-counter way of serving customers in Pakistan, suggests that there are low-tech ways of leveraging digital without having smartphones and a internet connectivity the way we know it in the developed world. So I would just encourage innovative solutions that leverage even poor connections.
Yeah, I agree. Let me build on that, and it also allows me to transition into the next question on the MODELO PERU. There are lots of ways in which poor people can connect to things like mobile wallets through a mobile phone, even a simple feature phone without internet connectivity. And while internet connectivity is, of course, helpful and should be promoted no matter what, for example, in MODELO PERU, the system is designed to run on feature phones. And I think, you know, the issue of internet connectivity, or how these systems run, is a really key question in ensuring that they're inclusive and designed to suit the needs of the poor, who might not always have internet connectivity in every case. But in MODELO PERU, you don't need to have an internet connection in order to use it. It is designed to run on just a feature phone and to be, you use your phone itself to set up the account. And if you have a phone, you basically have the ability to set up that account. And there are lots of things like just SIM cards or slim SIMs that go on top of SIM cards that enable connectivity to mobile wallets. I'll now answer the question on MODELO Peru. Will it be profitable? What will it take? Can it be replicated? Yes, I think it will be profitable. This initiative was led by the Peruvian Bankers Association. And in coming together and designing a shared platform that Ericsson is running, it means that all of the banks have contributed only a small portion of the cost of setting up this platform. So it's a cost that is being shared by 34 different financial institutions, meaning that it's a very small investment for each one of them. And having a shared platform also means that updates, system updates and alerts and the branding are shared across all of these institutions. And so I think it's a really effective way to drive costs down for delivering services to a low-income market. And so I do think, and the banks involved do think that it will be profitable. Can it be replicated in other markets? Yes, of course. I don't see why not. I think what has been key in the case of MODELO Peru is a very strong leadership of the Bankers Association with a strong commitment to financial inclusion that came from the national financial inclusion strategy. And so it has not been an easy task to develop this partnership, but I think the national approach and the leadership involved has been key. I would encourage everyone to go on our website and learn more about it. We did a webinar on it that can be listened to, and there are several articles on our website, www.betterthancashalliance.org. And while you're there, feel free to download any number of our other case studies and check out some of the experiences that other members have had digitizing payments.
Yeah, and Eric here, let me also jump in on the question that was directed for me. I believe that many banks, telcos, and existing organizations are struggling to be innovative. It takes a lot to change a massive structure that some of these organizations are. I believe the answer is different depending on if it's a large incumbent bank such as South Africa's Big Four, a growing mid-tier Kenyan bank, or a more nimble and digitally focused telco. But in any cases, most of these institutions are struggling to understand today's non-customers and to become relevant. I believe that the development sector can contribute with funding to say one thing in terms of organization strengthening and to trigger new business models. But there needs to be an awareness, both when you act as a funder or as a knowledge partner, in how the change dynamics, how the stakeholder dynamics in these organizations actually work. And that's something that we often see ourselves coming in to mediate or facilitate. I believe that really understanding the business dynamics, if you are going to collaborate with someone in the industry to take financial inclusion to scale, is critical. And really the only way to avoid just becoming another pilot and really seeing an initiative being taken to scale.
Thank you, Eric. We received some other questions, but in the interest of time, we'll just go over two. One of them is addressed to Fiona, and it goes, how was the liquidity issue solved for the agents in Rwanda? The final question is for everyone, and it says, financial literacy, especially to the bottom of the pyramid customer, is the major challenge, especially when those customers are low in literacy. How do we address this issue? And again, I crave the indulgence of the panelists to please keep their responses to about a minute. Thank you.
Okay, thank you very much. So it's a great question around the liquidity issue. We're really still working through that ourselves. It's been a major challenge for us. We want to support the agents to continue to grow, and what we're doing is currently looking at piloting a revolving fund to support them when they have liquidity issues. But we're keen to hear more ideas, so if anyone out there that's listening has ideas on how to resolve this, we'd be very keen to hear it. And yeah, absolutely agree, financial literacy is a major challenge. Sometimes it's underappreciated how difficult it is to build people's literacy and capabilities. Once that's built, then they can really connect to the banks, but it really takes a considered cross-sector effort to support the building of financial literacy.
Great. Does Mia, are you interested in answering the final question? I can read it again if you would like to hear it.
Yeah, I agree. Of course, financial literacy is a huge issue, and we encounter that all the time. Our work is really more focused on advocacy and awareness, raising awareness around the benefits of shifting over to payments with the organizations that are making those payments. And so we try to raise literacy and awareness of the benefits on that level in dealing with governments, in dealing with companies, in dealing with international organizations like CARE and others. And what we do in that regard is put together toolkits that are available on our website and reports. And so I invite anyone on the call to access those, and are very pleased to have partners such as many of our development organizations that work on the literacy piece directly with people using these products and services.
Thank you very much, Mia. And thank you, everyone, for such a great discussion today. And we had a lot of good questions, and it was good to just provide some background and some context to all the issues that were raised. And hopefully everyone has a more in-depth understanding and knows how they can connect with other stakeholders on this issue to see that we promote financial inclusion in all the different aspects that we can. And I would like to give a special thank you to Accenture Development Partnership and CARE International UK for co-hosting this webinar with us, and to our fantastic speakers. Before we close, I just want to highlight a few resources on this topic if you're interested in learning more. As was discussed during the webinar, thanks to Fineric's presentation, we heard all about the Within Reach research. Just as a reminder, this webinar, a recording of today's webinar and the slide deck, will be posted on the UN Global Compact website. I'll also like to mention that CARE International UK also has some resources. They have a state of linkage report, which I would edit and put on the slide so it's available to everyone to see. And thank you, everyone, for joining us today. I know we started a little bit late, but I'm grateful that you were all here and that we had such a great discussion. And a special thank you to our panelists again. Thank you very much, and have a great day.